Oh, hello. Hi. Thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and analysis. On today's video, we are going over Finviz Part 2, and I'm going to show you how we can use hindsight to our advantage. But also, if you could go ahead and subscribe and or like the channel, it lets the YouTube people know that there is someone out there trying to enhance the lives of others through stock market investing. And I'd really appreciate it. So we're gonna get into this. One stock that I found in 2015 was AMD. And what AMD did was go from about $1.70 to 120, which is over 1,000 for sure, 10,000 possibly percent gain. And I've used the core data points from that to find my other 10 baggers that I've ran, which is 1,000% plus gains. So what we want to do is think of, okay, hindsight is always 2020, 2021, whatever, 2022. Um, so how can we use that to our advantage? Well, think about all of the companies that you wished you had invested in. Apple, Tesla, AMD, Nvidia, Digital Turbine, you know, there's hundreds. So what we're going to do is we are going to go look. We're going to use AMD as our first example. And we are going to see where it was at when it was a dollar. So we're going back. It's going to be 2015. About October, middle-ish October is where we want our screener to start looking for companies that are in a similar setup. Because if we would have bought AMD at a 177 and held it to 160, that is a monster gain. So we want to find these in the future. So what we're going to do is we're going to go to Wayback Website Generator, and we are going to go to the Internet Archive. And here is a tip for you guys. When you are on Finviz, you have to grab the URL up here and you've got to paste it. But you can't click any other time frames when you enter the stock because you are going to get an error such as this. It doesn't exist. So what we have to do is we have to exit AMD and we have to go back and we have to take the link that is provided on the landing, which is right here. All right, we've got AMD and we want to go to 2015. And it's around October. Let's do October 2015. Okay, so now we have all these data points. Let's capture all these data points and make a screener. We are going to call this screener potential 20x stocks. So this will find us companies that could 20x, which is if you put $100 in, you would get $2,000. Okay. So we have our screener right here. I'm just going to maximize to show you guys what it looks like. We've got the screener here, and we are going to go ahead and do the half screen. All right, so we're going to look for market cap of 1.5 bill. So it's going to be small. It falls in the 300 million to 2 billion. We want to get, let's do quick ratio over 1. That means that they can pay off their debt and some if they had to, over 1. We want to get, let's see, gross margins over 30%. That's great. And if you can't find something, do Control F and type in gross, and it'll show you where it is. Over 30%. Check. Okay. We can also see the SMA 20 and the SMA 50, the prices over both of those. Price above SMA 20, price above SMA 50. And let's scroll over to the right to see what else we've got. Okay. Average volume is 11 million. So we're gonna go here. Um, we want over 2 million. That's the highest we can go to hit that metric. What else we have? I think this is decent. Price $2 back in 2015 is not what it is nowadays. So I'm gonna say the price is gonna be under $7. All right. Let's see what else we've got going on over here. Typically, we don't want to use any of the negative metrics because it could not be um, an accurate picture of what the company is projected to do. And number two, we mainly want to rely on charts and growth to give us a better picture of where the company is going. So I don't like to include the negatives. Although they're important, we do want to look at the bigger picture, which is always going to be number one, the chart, and number two, the growth of the company. And right here, we're seeing EPS is negative for this year, nothing next year, nothing for the next 5 years. So seeing something like this, I would probably just disregard because that doesn't seem realistic. So what else can we find on here to utilize? We do want optionable and shortable. Yes, that means that uh, the liquidity of the stock, there's enough liquidity so people can short it or trade options, which is good. Um, it is a little over encompassing because some stocks that are small companies may not have that. So I'm actually going to keep that metric off. But I am going to look for other potential metrics. Institutional ownership is 60%. Okay, let's go. Institutional. There it is. Okay, we want over 60% is high, so I'm gonna do 30%. We're down to 14 tickers. This is great. This is great. All right, what else can we grab? A short ratio. Ratio? I don't know if they payout ratio, quick ratio, current ratio. Nope, they don't have the short ratio. So I think that's about it. Sales past 5 years is positive, so that's another thing we could have. But again, some companies could just have a dash there, which would it'll be eliminated from our pool. So we actually don't want to eliminate that yet. So I'm gonna keep this here, and now we can see we have 14 stocks that could move potentially 20 to yeah 20x. No, 200x. So I'm going to save this screener and I'm going to call this potential 20x stocks. Save. All right. Perfect. So since we've done that, I am going to now take care of the definitions portion of this video. Grab a pen, paper, some water, some coffee, and I'm going to read these off to you and feel free to note them down. Or you can pause the video and take notes. But this is very important in your investing journey because you want to have a solid foundation of knowing what to pick and how to pick and being confident in what you pick in terms of stocks, whether you're going to invest for a day or 5 days, 50 days, 6 months, a year, 5 years, 10 years, all that fun stuff. All right, I'm going to start the definitions now. Okay, exchange. The stock exchange on which a company is listed. All stocks listed on National Association of Securities Dealers Automated Quotation. That's NASDAQ. New York Stock Exchange and American Stock Exchange. So we have the NYSE and the AMEX are also available. And I'm just zooming in here. Moving on to index. A stock's membership in a major stock exchange index, such as Dow Jones Industrial or S&P 500. The stock indices track the performance of various segments of the market. So, excuse me, the S&P 500 has the top 500 companies on the markets, just as FYI. Sector. Companies are divided into several groups, sectors, according to their business activities. So let's just take a peek at what that means really quick. So when we look at sectors, we have basic materials, communication services, consumer cyclical, consumer defensive, energy, financial, healthcare, industrials, real estate, technology, and utilities. So that is sector. Industry are companies in a common sector are further divided by products and services into smaller groups, dash industries. So going over to industry, we have exchange traded funds, which are ETFs, advertising agencies, aerospace and defense, agriculture inputs, airlines, airports and air services, so on and so forth, insurance, leisure, lodging, luxury goods, publishing, railroads, REITs, security and protection services, semiconductors, silver, software, solar, steel, trucking, uranium, utilities. It's a long list. Country, the geographical location of a company listed on US markets. This filter includes continents, countries, or groups of countries such as Brazil, Russia, India, China. BRIC is what it's called. Market cap, the total dollar value of a company's outstanding shares. Market capitalization is a measure of corporate size. And on Finviz help portion, they do have a box where it says market cap equals current market price multiplied by number of shares outstanding. Shares outstanding equals total number of shares minus shares held in treasury. I don't know what that means. Float equals shares outstanding minus insider shares minus above 5% above 5% owners minus rule 144 shares. Again, rule 144 shares. Let's just look that up. What is rule 144 shares? Okay, it is the most common exemption that allows the resale of unregistered securities in the public market, which is otherwise illegal in the US. The regulation gives a specific set of conditions that a shareholder must meet in order to sell unregistered, restricted, or controlled securities in the public market. Sweet. Okay, so we learned that what the Rule 144 is. Let's look at what shares held in Treasury. Treasury stock, also known as treasury shares or reacquired stock, refers to previously outstanding stock that is bought back from stockholders by the issuing company. Ah, stock buybacks. Okay, cool. Very cool. Okay, moving on. PE, a popular valuation ratio of a company's current share price compared to its per share earnings, in parentheses, trailing 12 months, exit parentheses. Low PE value indicates a stock is relatively cheap compared to its earnings. For instance, a PE value of 15 means that means that the current price equals the sum of 15-year earnings per share. The average level varies across the market, therefore PE value should be compared per sector or industry. So PE equals current, and this is in another box on the Finviz help site. So we have PE equals current market price divided by earnings per share. PE equals average common stock price divided by net income per share, and EPS, earnings per share, is in parentheses net income minus dividends on preferred stock, exit parentheses, divided by average outstanding shares. So the price to earnings valuation ratio, 2020, 2021, it was not really a great indicator to determine the valuation of a stock. Yes, the lower it is, the better it is in terms of valuation for the company. Yes. However, it is kind of an older valuation tool utilized to value companies. So I'm not a big fan of the PE rule. Please feel free to dig in. There's probably plenty of information on YouTube, on the internet, on how to use the PE ratio. Again, I'm not a big fan. Moving on. Okay, forward PE is a measure of the price to earnings ratio using forecasted earnings for the PE calculation for the next fiscal year. If the earnings are expected to grow in the future, the forward PE will be lower than the current PE. Yes, you always want the forward PE to be lower than the current PE. I don't know where that would not exist. Okay, and then in the forward PE section, there's a gray box that has forward PE equals current market price divided by forecasted earnings per share. Okay, the PEG ratio, a ratio's value used to determine a stock's value while taking into account the earnings growth. PEG is used to measure a stock's valuation, PE in parentheses, its projected 3 to 5 year growth rate. It is favored by many over it is favored by many over the price divided by earnings ratio, PE ratio. Why didn't they just say that? Because it also takes growth into account. A lower PEG ratio indicates that the stock is undervalued. A lower PEG ratio indicates that a stock is undervalued. I'm just going to throw that out there. Let's look at AMD. A lot of the times, yep, see right here, we don't even have the PEs. So if you're searching for PEs on Finviz, you could have missed out on AMD because they they don't track it. It's not that AMD doesn't track it, but Finviz, sometimes depending on the format of earnings or financial files when they're submitted, um, or several reasons why they could be blank. If you search for the PE ratio or PEG ratio, you could be missing out on potential big names like AMD. So I prefer to not use those in the screener. You can feel free to do it. The PE PEG ratio, that's more of a Warren Buffett old school type thing. It's not a bad thing, but I don't think it's commonly used for current valuations. You will see it from time to time. All right, going down to PS, which is a ratio that reflects the value placed on sales by the market. It is calculated by dividing the current closing price of the stock by the dollar sales value per share. The ratio is often used to value unprofitable companies. So PS equals current market price divided by total revenues per share. And again, this is often used to value unprofitable companies. Okay, we are not going to be messing with companies that aren't profitable. Yes, there might be some biotech sprinkled in there that do have promising data. Those are very risky, and please consult with a professional. But we will not be messing with unprofitable companies outside of that. So, and when I mean that, I mean companies that don't generate money and are on the cusp of having income greater than the debts, so or liabilities. So, yeah, price to share, um, not my cup of tea, but please feel free, educate yourself. All right, the PB, a ratio used to compare a stock market's value to its own book value. It is calculated by dividing the current closing price of the stock by the last quarter's book value per share. A lower PB ratio could mean that the stock is either undervalued or something is fundamentally wrong with the company. Let's look at AMD really quick on Finviz, price to book. Yep, they don't even have it. So again, in a gray box on the Finviz help site, there is PB equals current market price divided by, and then parentheses, total assets minus total liabilities. And then again, PB equals current market price divided by, in parentheses, total common equity divided by total common shares outstanding, in parentheses. And book value equals, in parentheses, total assets minus total liabilities equals shareholders' equity. Can't talk. So again, you interpret this the way you want to. Please do some research on it. If we were looking at the price to book ratio for Finviz or for AMD, we would have missed out. Moving on down, I forget some cup of water. Drink of water. Okay. Price to cash, a ratio used to compare a stock market's value to its cash assets. It's calculated by dividing the current closing price of the stock by the latest quarter's cash per share. Again, I don't like if we're looking at how much cash they have over quarter. I mean, we're thinking forward. So, and then in Finviz on the help site, we have in a gray box price to cash ratio equals current market price divided by cash per share. Again, these price ratios are not my cup of tea. Please feel free to do your own due diligence on these. I will not be using them in my screeners, but you can definitely incorporate them into yours. We will find profitable, healthy companies that are due for growth without these. So, yeah. Next, we have price to free cash flow. A valuation metric compares a company's market price to its level of annual free cash flow. And in a box on the Finviz site, we have P divided by P divided by FCF equals current market price divided by cash flow per share. Cool. Okay, EPS and EPS growth this year. This is great. Not in terms of the calculation, but actual growth quarter over quarter, year over year, month over month. So EPS is the portion of a company's profit allocated to each outstanding share of common stock. EPS serves as an indicator of a company's profitability and is generally considered to be the single most important variable in determining its share price. It is also a major component of the PE valuation ratio. All right, in a gray box on the Finviz help site, they have EPS equals total earnings divided by total common shares outstanding, and in parentheses, trailing 12 months. EPS equals, in parentheses, net income minus divided dividends on preferred stock, and parentheses, divided by average outstanding shares. EPS growth this year equals, in parentheses, EPS this year minus EPS previous year, end parentheses, divided by EPS previous year. All right, some easy definitions. EPS growth next year equals definition of a EPS estimate for the next fiscal year. EPS growth past 5 years. EPS annual growth over the past 5 fiscal years. EPS growth quarter over quarter. EPS increase over the last quarter. Sales growth quarter over quarter. Company's total revenue increase in the last quarter. Sales growth past 5 years. Annual sales increase over the past 5 years. Dividend yield. The dividend yield equals the annual dividend per share divided by the stock's price. This measurement tells what percentage return a company pays out to shareholders in the form of dividends. Investors who require a minimum stream of cash flow from their investment portfolio can secure cash flow by investing in stocks paying relatively high, stable dividend yields. And a gray box, there is dividend yield equals annual dividend per share divided by price per share. Great. Return on assets, an indicator of how profitable a company is relative to its total assets. ROI gives an idea as to how efficient management is using its assets to generate earnings, calculated by dividing company's annual earnings by its total assets. ROA is displayed as a percentage. In a gray box, Finviz help site, there's ROA equals annual earnings divided by total assets. Return on equity, a measure of a corporation's profitability that reveals how much profit a company generates with the money shareholders have invested, calculated as net income divided by shareholders' equity. I'm going to put some glasses on really quick. And then in the gray box, we have ROE equals annual net income divided by shareholders' equity. ROE equals annual net income divided by book value. ROE equals annual net income divided by parentheses total assets minus total liabilities in parentheses. Return on investment, ROI. Performance measure used to evaluate the efficiency of an investment or to compare the efficiency of a number of different investments. To calculate ROIs, the benefit parentheses return of an investment is divided by the cost of the investment. So ROI equals, in parentheses, gain from investment minus cost of investment, in parentheses, divided by cost of investment. Current ratio, a liquidity ratio that measures a company's ability to pay short-term obligations, calculated as current assets divided by current liabilities. That is the current ratio. And then in the gray box on Finviz Help, they have current ratio equals assets divided by current liabilities. Current assets divided by current liabilities. Quick ratio, an indicator of a company's short-term liquidity. The quick ratio measures the company's ability to meet its short-term obligations with its most liquid assets. The higher the quick ratio, the better the position of the company. Calculated as current assets minus inventories, in parentheses, divided by current liabilities. Long-term debt to equity, a measure of the company's financial leverage calculated by dividing its long-term debt by stockholders' equity. It indicates what proportion of equity and debt the company is using to finance its assets. In a gray box, they have long-term debt to equity equals long-term debt divided by, in parentheses, shareholder equity. They also have long-term debt to equity equals long-term debt divided by, in parentheses, total assets minus total liabilities. And long-term debt to equity equals long-term debt divided by, in parentheses, book value. Debt to equity is a measure of a company's financial leverage calculated by dividing its liabilities by stockholders' equity. They have buy in there too many times. It indicates what proportion of equity and debt the company is using to finance its assets. In a box on Finviz Help, they have debt to equity equals current liabilities divided by, in parentheses, shareholder equity. They have debt to equity equals current liabilities divided by, in parentheses, total assets minus total liabilities, in parentheses. And lastly, debt to equity equals current liabilities divided by, in parentheses, book value. Okay, I gotta yawn. Sorry, I don't know how to edit things out in the middle of videos. So, gross margin. A company's total sales revenue minus its cost of goods sold divided by the total sales revenue expressed as a percentage. The gross margin represents the percentage of total sales revenue that the company retains after incurring the direct costs associated with producing the goods and services sold by a company. The higher the percentage, the more the company retains of each dollar of sales to its service and other costs and obligations. So I look at this as how much money does a company pay to make like $100. So if your gross margin is 30%, that means you are gaining 30%. Sorry, it's total revenues minus cost of goods. Right. So you make 70, let's say I make shirts, I have a shirt company, I make 100,000 a year, but my gross margin is 30%. So that means I get to keep 70,000 and I lose 30,000. So the cost of me to run business is 30% basically. So gross margin in parentheses on the Finviz help site is gross margin equals, in parentheses, total sales minus costs, in parentheses, divided by total sales. Okay. Operating margin is a measurement of what a proportion of a company's revenue is left over after paying for variable costs of production, such as wages, raw materials, etc. A healthy operating margin is required for a company to be able to pay its fixed costs, such as interest on debt, calculated as operating income divided by net sales. That is The formula, operating income divided by net sales. Net profit margin is a ratio of profitability calculated as net income divided by revenues or net profits divided by sales. It measures how much out of every dollar of sales a company actually keeps in earnings. So we have net profit margin equals net income divided by revenues, and we also have net profit margin equals net profits divided by sales in a gray box on the Finviz help site. Payout ratio, the percentage of earnings paid to its shareholders in dividends. Payout ratio equals dividends divided by earnings. Insider ownership, percentage of shares currently owned by company management. Insider transactions, a company's shares being purchased or sold by its own management. Value represents percentage change in total insider ownership. Institutional ownership, percentage of shares currently owned by institutional investors. Institutional transactions, a company's shares being purchased or sold by financial institutions. Value represents percentage change in total institutional ownership. Float short, the number of shares short divided by the let me read that whole one again. Float short is the number of shares short divided by total amount of shares float expressed in percentage. So looking at AMD, we have a short float percent of 17.24%. Sorry, it's really small for you guys. So let me see if I can blow this up. We have 700 and calculator 779 180. So there we go, 799,108,000 shares, and 17% shorted is times 0.1724. 137,000 shares short. So that's what 17% of the shares outstanding look like. That's a lot of shares. So 137 million shares short times 1.94. That is $250 million shorting AMD stock. Crazy. Okay, so that's float short. That's important. Analyst recommendation. An outlook of a stock market analyst on a stock. You don't want to listen to analysts ever. Do not ever pay attention to recommendation down here. It is very off base all of the time. The lower it is, the better, yes, but don't be upset if you see a 5, 4, 3, 2, or a dash here. Analysts are misunderstood. Option/short is stocks with options and or available to sell short. That means like AMD. You can do call options or put options. Let's see. Optionable, yes. Shortable, yes, down here. So that means you can short the stock and you can also trade options on it. Call contracts, put contracts. I never used options to make my money, so we're not going to get into it. Lucky. Earnings date. The company's nearest earnings report date. The earnings reports of significant companies should also be watched carefully as they may have great influence on the stock market overall. Yes. So there is a general rule of thumb that you don't want to play earnings. So luckily for us, or for me, us, if you follow my strategies, we are in the stock for the long haul, essentially. If we're in a stock and we're worried about its earnings, we maybe should not be in it. I understand there could be something that we didn't account for, but generally, earnings never break a stock unless it's very risky. So that's just been my experience. Performance, percent rate of return for a stock for a given time frame. They have 4 in there too many times. And the box on Finviz, they have performance values are based on the following time periods. Performance 1 week equals last 5 trading days. Performance 1 month equals last 21 trading days. Performance 3 months last 63 days. Performance 6 months equals last 126 trading days. And performance 1 year is the last 252 trading days. So if we go over here, perfect performance week, performance month, performance quarter, performance half, performance year to date. Mouthful. All right, volatility, a statistical measure of the dispersion of returns for a given stock, represents average daily high or low percent range. RSI 14, the relative strength index, is a technical oscillator showing price strength by comparing upward and downward close to close movements. It indicates oversold buy signal in parentheses and overbought in parentheses sell signal price levels for a given stock. That's pretty important. So if it's over 70, it's too hot, and if it's under 30, that means it's underbought. So 65, that's pretty warm. Let's see what happens. What did the weekly look like? It might not have it. Oh man, look at that chart. Um, okay, so I hit the weekly and now it moved me from $1.94 to 369 and back to 2014. So yeah, um, the Wayback Website Generator is good for the landing of where you want to go, but don't try and mess around with the data inside of here because it is wonky for sure. So um, anyway, the RSI at this time frame is 60, which is okay. You can see it kind of made a little bottom right there and it went up a little bit. But as we saw for October of 2015, it went down. So RSI is pretty good in terms of determining when to make your first buy. Gap, the difference between yesterday's closing price and today's opening price. Gaps indicate either a lack of supply, gap up, or demand, gap down, and usually occur after major news events like earnings, or a company says, oh, we're going to slash forecast for the next year, or we're going to guide upwards for next year, so on and so forth. All right, simple moving average is calculated as an average of the last n periods. I don't know what n periods are. Let's Google it. What are n periods stock market? N is the number of compounding periods per year. For example, interest that compounds annually would be 1. So yeah, take that how you will. Maybe watch some more videos on that. So from what I know, looking at 20, 50, and 200 day, it's basically the average of the last 20 days as the 20-day moving period. So let's go back to here. Let's hit the back button. So here we can see the 20 SMA is this purple line going down. So this is the average price of the last 20 days, and you can kind of see it follows suit. And the current price does respect it or disrespect it in certain points. Like right here, it looks like it closed above it barely. Didn't have enough strength, so it plopped back down. It tested it there, tested it there, tested it there, and it broke through. And then it was like, not enough strength, sorry, and it went back down. So I do use the 20, 50, and 200 SMAs often. We will become very acquainted with those. Change represents the percentual difference between current close and previous close price. Change from open is the percentual difference between current close and today's open price. High low, low is the minimum of lows during the last in periods, and the high is the maximum number of highs during last in periods. Filter options represents of a percentual distance from the record high or low price. So if we go back to AMD, we have 52-week high, 52-week low. In percentages, in Finviz, the new version, they actually have the actual price. So 38.9% down from here. It was probably like $1.40, maybe less. And the high is probably, let's say, yeah, 340. So That's what that looks like. Pattern. A chart pattern is a distinct formation on a stock chart that creates a trading signal or a sign of future price movements. Chartists use these patterns to identify current price trends and trend reversals and to trigger buy and sell signals. Hell yeah. We are going to use the heck out of patterns. Can't wait. Candlestick or Japanese candlestick. A candlestick pattern is a distinct formation of an open, high, low, and close prices for given periods of time on a stock chart that creates a trading signal or sign of future price movements. So here is a example. Let's do here. That's not what I wanted. Okay, so as we can see right here, whenever it is a green candlestick, the price opens down at the bottom, and as the price goes down, this would be a full red body candle going down, but it looks like it stopped here and reversed its way back up, and it went all the way up here, but then the price went down and closed right about there, giving us the green bodied candle. It is beautiful. And it is this opposite for the red candle. So we open up here. It was like, oh, we're gonna go up today, and it was like, just kidding. We're going down, 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 even more down. And it's like, that's too far down. Then you see some buyers coming in, and then it eventually closes right here. Japanese candlesticks are beautiful. I do not recommend trading lines or what have you. Yeah, don't do lines. It's so ugly. I don't even think the site will let me do it. I don't know why I clicked it. Yeah. So AMD $53. Yeah, don't do this. This does not tell you anything. Beta, a measure of the stock's price volatility relative to the market. An asset with a beta of 0 means that its price is not at all correlated with the market. A positive beta means that the asset generally follows the market. A negative beta shows that the asset inversely follows the market, decreases in value if the market goes up. Um, Beta is a good one. We are not going to use it, but it does kind of tell us when we are on a streak, up or down, whether we're getting away from the market and the stock is undervalued and we should buy more, or the opposite if the beta is too strong and we're pulling away from reality. So that's a good one. I don't use it. I typically rely on the charts and candlesticks to tell me where we are at. But yeah. All right. ATR is a measure of the stock volatility. The average true range is an exponential moving average, in parentheses 14 days, of the true ranges. The range of a day's trading is high to low. True range extends it to yesterday's closing price if it was outside of today's range. So in parentheses, we have a box. True range equals max, in parentheses, high, comma, close parentheses, minus min, open parentheses, low, comma, close prev, end parentheses. Um, Again, this does not pertain to us, but please feel free to look into it further. It is good to know, as it could come up in conversations down the road. Average volume. The average volume is the average number of shares traded in security per day during the recent 3-month period. Relative volume is a ratio between current volume and 3-month average value intraday adjusted. So relative volume equals current volume divided by 3-month average volume. Current volume is total number of shares traded for a given stock today or in the last trading session. Price. The current stock price or the close price during the last trading session. Signals. Stocks can be screened by signals, special events which traders usually enter or exit positions. So this is what that looks like. Let me open this up and let's go to signal here. Top gainer, top loser, most active, underbought, all this fun stuff. Trend line resistance. Let's just look at this for example. Let's look at charts. And we can see it's in a trend line, it's in a trend line, it's in a trend line, so on and so forth. Yeah, so you can do this if you want. It's good practice. I would say look into all these and see how the stock reacts to certain patterns. Um, and you can also do there's signal, and then there's also candlestick. Yep, down here, candlestick. Long lower shadow, that's bullish. Long upper shadow, that's bearish. Bullish and bearish means optimistic or pessimistic. So bullish is optimistic that the price is going up. Bearish is pessimistic, the price is going down. So I'm going to hover these and tell you if they are bearish or bullish. Long lower shadow, bullish. Long upper shadow, bearish. Hammer, bullish. Inverted hammer, could be bullish. Spinning top white, bearish. I don't like spinning tops, but say they're both bearish. Doji is bullish. Dragonfly Doji is bullish. Gravestone Doji is bullish. Maribuzu white. I don't know what that is. Let's just see. Maribuzu. I don't. Yeah, I'm not sure what this. It's a full green candle. Okay. So Maribuzu black is a big red candle, I'm guessing. Yeah, big red candle, big red candle. Okay, cool. Learn something new every day. Ooh, I like this pattern. It's a shell company. We do not invest in shell companies. Oh, you can't see. There we go. We do not invest in shell companies. So we have all of these signals. I will not go over these signals, but now we're back to the other data. So shares outstanding equals the total number of common shares currently owned by the public. In parentheses, we have shares outstanding equals total number of shares minus shares held in treasury. And then we have shares float, which equals the total number of shares currently owned by the public and available to be traded. In a box, we have shares float equals shares outstanding minus insider shares minus above 5% owners minus rule 144 shares. And that wraps up the Finviz definitions. Yes. Oh my gosh. Okay, I need a drink. Okay. Wow. Well, since I'm already here, I've been here for 47 minutes. I'll just give you an update on life. Thank you for tuning in for this whole video if you did. These are very important data points. So what's going on? I'm hoping I have really exciting news for you guys in about a month or two. We'll find out. And that pertains to income and anything else going on. I need to learn how to edit videos, add little fillers, make them more engaging. So I'll need to find a Windows compatible software to edit videos and just call it a business expense. So yeah, that's about it. I will not tell you what the next video is because I will surprise you. So thanks for tuning in. Have a great day or night, and I will see you guys next time.